Welcome back. Let's take a look at markets. Futures are extending the losses this morning, although the Dow Industrials just went positive. It's up 6 points. The headline of the morning. A New York jury found President Donald Trump guilty on all 34 counts in the New York City trial. This makes him the first U.S. president to be convicted of a crime. Joining me now is Heritage Foundation public finance economist E.J. Antoni. E.J., good to see you. How are you expecting the markets to react? Give us your assessment of this verdict.
Well, Maria, I think in the short term, we're probably not going to see much of a reaction here. But in the long term, you are going to have some pretty deleterious effects. Number one, on bond markets, but number two, on the local economy in New York City specifically. Who on earth wants to invest in a place like New York? Who on earth wants to do business there if this is the kind of justice system with which you're going to have to deal? I think that's going to be a serious drain on the economy. But in terms of the long-run effect on bond markets, who on earth wants to do business with the United States government that doesn't respect the rule of law? Maria, if you pick up a history textbook, for example, on finance, you will find plenty of nations that don't respect the rule of law and did things precisely like what we see right now, the jailing of political opponents. And sure enough, there's a pretty good correlation between countries that don't respect the rule of law and don't respect contracts, including sovereign debt. Who on earth would loan the Treasury money under such a regime?
That is exactly what Kevin Hassett said to us just recently. This is just incredible in terms of the reaction that we're getting. We're also taking a look at just bad policy that has taken out people's wages because of inflation. We're waiting on the April PCE index out in just about 30 seconds. Economists are expecting 0.3% gain month over month and year over year up 2.8%. EJ, what do you want to say about the inflation numbers coming up here?
Well, unfortunately, Maria, we still don't actually see inflation moving towards the 2% target. You need a monthly rate of between 0.1% and 0.2% to actually achieve that 2% annual target. And we just aren't seeing those numbers. So the trend is very clearly not going towards 2%. When you look at something like CPI, it's obviously trending much higher than PCE because you don't have the same substitution effect to reduce the rate that we see with the PCE. But whatever the case, you still are not seeing inflation going to where it needs to be. And it can't, quite frankly. The Fed needs to keep inflation high in order to help Yellen finance these massive, massive deficits.
Yeah. How will the markets react if we get a steeper than expected PCE index? This is the Fed's favored look at inflation, right?
Oh, absolutely. And again, one of the reasons why the Fed likes this index in particular is because it gives lower readings than something like CPI. And so it gives them a little more wiggle room. In other words, it allows them to create more inflation and get away with it. How's the market going to react? I think very clearly we're going to have a sell-off if this comes in hot.
All right. The number is out. Let's get